Hi, this is Marie from Legacy Publishing. Welcome to the latest edition of our video newsletter. In today's video, we are going to explore the use of the option cycle strategy to increase the accuracy and profitability of option trading. Chuck, can you tell us about the option cycle strategy and how this strategy helps us select options?
Marie, trading options can be a bit overwhelming as there can be hundreds of options to choose from. Once you decide which stock or ETF you want to trade, you must then decide on an option expiration month and strike price. While stock selection is important for successful option trading, in my experience, selecting an option's time length and strike price is just as important as selecting the stock itself. Marie, the first step in my option selection process is determining the price trend of a stock using my 3 trend following systems. If the price trend is up, then I look at bullish strategies such as purchasing call option spreads, and buy rights. If the price trend is down, I look at bearish strategies such as purchasing puts or put option spreads. For short-term trades of 1 to 3 months, I use MACD to determine the price trend. For intermediate-term trades of 3 to 6 months, I use the 50 and 100-day exponential moving average crossover, and for longer-term trades of 6 to 12 months or even longer, I use the major trend system to determine the price trend. When the price trend is bullish, we want to implement bullish option strategies, and when the price trend is bearish, we want to implement bearish strategies. In this video, we are going to focus on bullish strategies. A short-term buy signal is indicated when the MACD line is above the 18-day EMA line, and an intermediate-term buy signal is indicated when the 50-day exponential moving average is above the 100-day exponential moving average. And a long-term buy signal is indicated when the 1-month price is above the 20-month exponential moving average. Now, I'm often asked if I recommend taking a bullish trade after a buy signal occurs, and many times I will enter a bullish trade after a buy signal occurs, which of course is the crossover of the moving averages. But then I use the money management guidelines presented in the Wealth Creation Alliance manual to exit trades if I enter the trade late. Once I determine the price trend, I must then decide on an option time length or expiration date and strike price. For many stocks, there are literally hundreds of options to choose from with different expiration dates and strike prices. The option cycle strategy helps us narrow down the list of available options to those with the best profit potential. I like to use historical price data to help select the time length of an option. Historical price data allows me to know the percentage of times a stock increased in price between option expiration dates. This helps me select an option time length or expiration date that has a high probability of success. We will focus on selecting an option's time length or expiration date in this video. After selecting the time length of an option, we must then select a strike price. We will focus on strike price selection in our next video, which is part 2 of high accuracy options trading. Now, the goal of the option cycle strategy is to enable you to become a successful options trader by helping you understand the time length and strike price selection process that results in high accuracy and more profitable option trading. I use historical price data to measure the percentage of times a stock increases in price in between option expiration dates. This gives me a good idea of the accuracy I can expect for purchasing a 1-month, 3-month, 6-month, or a 1-year leaps option. I use over 6 years of price data, and results assume a stock was on a buy signal using the intermediate term trend following system. Let's look at an example of this historical price data. We will use Apple stock in this example. This table summarizes 6 years of historical price data for Apple stock. The table shows that if you purchase an Apple 1-month option on option expiration day, historically there's a 70% chance Apple stock increased in price over the 1-month period between option expiration days. Purchasing a 3-month option resulted in an increase in Apple stock 76% of the time, and purchasing the 6-month option resulted in an increase in Apple stock 91% of the time. Purchasing the 1-year leaps option resulted in a stock price increase 100% of the time. Again, this data assumes that you purchase and sell an option on option expiration day. This data gives us a good idea of the accuracy we can expect for the various time periods. Based on this data, if Apple was in a price uptrend and I wanted to purchase an Apple call option, I would trade the 3 or 6-month options for Apple, which resulted in a stock price increase 76% of the time for the 3-month and 91% of the time for the 6-month. The 1-month option with 70% accuracy is too low. Now, longer-term investors may consider purchasing the Apple Leaps options, which historically is 100% accurate. Now, once we decide on the time length of the option, the next important decision is to select a strike price, which we will cover in our next video. This video was a brief overview of the option cycle strategy. My Wealth Creation Alliance program explores in more detail the use of the option cycle strategy to increase the accuracy of option trading, including option spread trading. For more information on becoming a member of the Wealth Creation Alliance, please call 800-624-5352 or log on to chuckhugheswca.com. So in conclusion, using the 3 trend following systems in conjunction with the option cycle strategy can result in high accuracy option trading. I use the option cycle strategy in my own trading accounts for option purchases, option spreads, and buy right trades. The option cycle strategy produced over $1,044,000 in actual profits, as shown by the copies of my brokerage account profit-loss reports that I will display at the end of this video. All of the trades are profitable with an average return of 88%.
This concludes part 1 of the high accuracy option trading. In our next presentation, we will focus on selecting an option strike price. Thank you for listening. We look forward to our next presentation.